Hello and welcome to The Upside. I'm Kyle Sharapita. Continuing February's trends, March was a busy month, filled with market volatility, a developing trade war, and a changing political landscape here in Canada. Today, we'll be reflecting on the month that was, featuring Fidelity's portfolio managers, subject matter experts, and special guests. We'll be looking at highlights from our Fidelity Connects webcast, which is live daily for financial advisors, but then available for all on replay as a video podcast. Every clip you see has an accompanying full-length 30-minute video available on YouTube, Spotify, Apple Podcasts, and more. Also, shortly I'll be joined by Audrey Kim to talk about ETFs. But first, we'll start things off with portfolio manager Mark Schmel, who manages several funds, including Global Innovators. He joined host Agnes Doherty on Fidelity Connects, and here responds to an audience question about meeting with company management.
We have a question from the audience here. They're asking, what are your favorite questions to ask when you meet with companies and company management? And I think that's a great question because you're obviously going to the NVIDIA conference today. You're going to China in a couple of weeks. What are your favorite questions to ask company management?
So I don't have favorite questions, but I have a favorite process. Process number one, interrupt. So a lot of management teams, they get monologuing, right? They get the same question over and over again, and they just start to go. And the best way to get any information out of them is to interrupt the monologue. And usually you go, I say something along the lines of, why did you say that? Or what does that mean? Or I don't understand, or something like that. I basically play dumb. When you interrupt their chain of thought, they actually have to think. They can't just spew out the garbage that they tell everybody. And I do that all the time. And I'm probably really irritating as a person in the room. But I would say 2 or 3 times in a meeting, if I can, I will absolutely interrupt the CEO's monologue, if I can. Some meetings are too big and you can't get there, but that's really important. Another thing I like to ask a lot is why? Why do you say that? Why did you say that? Why did you do that? Why are you? And then just keep following up with the why questions like a 2-year-old, because often you get 2 different types of management teams. You get the ones management teams that can answer every question all the way down. Then there's other people who know absolutely nothing and throw buzzwords at you all day long. So it's really important to get established, like, is this management team any good? Do they even know what they're doing? And that's the most important thing as a stock picker for like companies is you want management teams that know what they're doing in their business. I don't expect them to get the market right. That's my job. But I want to know that this guy knows everything there is to know about his company. And if he can't answer my why questions, or if I interrupt his monologue and he can't pivot and give me the answer, he probably doesn't know his business and he shouldn't be running that company. So those are 2 things that I do religiously in meetings. And I think they have worked very well. And it's really fun when you get like a management team that's throwing buzzwords at you and you ask them like, well, what does that mean? And they look to the side and ask their like other person, what does that mean? You're like, oh my God, you're running this company. You don't even know what your own stuff means. You would not believe how often that happens, by the way.
Wow.
It's scary.
Yeah. I would love to be a fly on the wall in one of those meetings, but too bad.
You would learn a lot being in one of my meetings.
Yeah, I'm sure we all would.
So I'm joined now by Audrey Kim, Investment Analyst Senior, ETF Capital Markets. Audrey, thank you for joining me.
Thanks so much for having me, Kyle.
So we just saw a clip of Mark Schmel, and his Fidelity Global Innovators class is one of several Fidelity funds now available as an ETF.
Right.
And you're here with me today to talk about ETFs. Specifically the Canadian ETF landscape,
yes,
where we've seen some flows so far this year, industry trends.
Yes.
So why don't we start with a high-level look at the Canadian ETF industry in 2025?
Absolutely. So we started the year with very, very strong momentum, and that really continued into February. And despite all the headlines, in February, we were still able to garner about $9.5 billion worth of flows, and over 18 billion year to date, which is pretty impressive. Unlike last year, fixed income ETFs actually saw a lot of success in the first 2 months. Fixed income ETFs actually garnered just over 7 billion in flows year to date, which is incredible, while equity ETFs garnered roughly over 8 billion in flows. So although equities were technically more favored thus far, the flows between equities and fixed income ETFs this year have been much more balanced.
Okay. Anything more to say specifically on equities, like what Canadians are looking at there?
You know what? So for equities, I think it's fair to say that investors were diversifying their regional exposures. So given, again, all the US headlines that we've been seeing the past month. So as a result, when it comes to US equities, they captured roughly about half of the equity flows, whereas year to date, but in February, we kind of saw the tides change, and we saw investors kind of shift from US equities and into Canada equities and global equities.
Right, yeah, February, a lot of volatility.
That's right.
What about fixed income throughout February? Anything significant there?
You know what? For fixed income ETFs, we actually saw a lot of demand in February with just over $4 billion in flows. And you know what? 1.2 billion of that 4 billion was really directed towards money market ETFs. So think about your high interest savings ETFs, cash, et cetera. And I think it's likely driven by the fact that all the tariff headlines, renewed inflation, job market expectations, and job market weakness and overall market uncertainty.
So other than the equities, fixed income, and then the money market products,
Yes.
are there any other areas in the ETF landscape where you're seeing interest?
Yes, and that would be the multi-asset category or multi-asset asset class. That has been the category and asset class that has seen consistent and tremendous growth, not only last year, but that has continued into 2025.
Okay.
So year to date, this category actually captured roughly over $2 billion in flows. And this asset class, along with equities, is actually the asset class that has the highest concentration of DIY investor assets.
Right.
So, and that makes sense given, this category kind of includes those simple all-in-one type ETFs.
Yeah, and I wanted to ask you more about the all-in-one products. Like, what are some of the benefits about an all-in-one type of product?
Oh gosh, there's tons of benefits, but to name a few, it would really be the fact that those are cost-effective solutions. They're simple, diversified, liquid investments that hold, in many cases, stocks, bonds, and other asset classes, such as cryptocurrency.
Right, and Fidelity has some all-in-one offerings, I believe.
Yes, we do.
Yeah.
So we have 4 all-in-one ETFs. We have everything ranging from the most aggressive, which is our FEQT. Then we have our FGROW. We have our FBAL, and we have FCNS.
Okay.
So these are absolutely fantastic products. And what makes our all-in-one ETF unique is that each portfolio, all those 4, have a small allocation to Bitcoin, which actually helps diversify the portfolio even more. And that is, again, unique to Fidelity, Fidelity's all-in-one products.
Okay, excellent. So what type of investor would you say the Fidelity all-in-one suite is best suited for?
Honestly, I think all-in-one ETF portfolios are suited for any investor. But they are especially well suited for young investors or investors that are just starting out on their journey, or those that have perhaps the smaller portfolios. And why is this? I think it's because it solves one of the biggest challenges of investing, which is diversification, right?
Right.
So through a single ETF purchase, you can acquire a pre-mixed portfolio of different assets, and you don't even have to worry about investment selection or asset allocation, how much you should put towards stocks, how much you should put towards bonds, what do you do in a given market environment. You don't have to worry about that. Fidelity does that for you, so all you have to do is make the trade, we take care of the rebalancing, we take care of the asset allocation, and you get that small sprinkle of cryptocurrency as well.
Wow. Okay. So diversification, pre-mixed bundle of assets sounds like a pretty solid solution for a young investor.
That's right. It's your one ticket type, turnkey solution. And that's why it's really liked by a lot of investors.
Excellent. And a small sliver to Bitcoin, which
Yes.
we'll actually be getting into in our next segment. So Audrey, thank you very much for joining me today.
Absolutely. Thanks so much, Kyle.
Thank you. All right. So yes, crypto and Bitcoin specifically has been a volatile asset class historically. So what is the outlook for Bitcoin amidst a volatile market? Andrew Klee, VP Product and Managed Accounts, was on Fidelity Connects at the beginning of the month and laid out the bullish case and the bearish case, as well as where Bitcoin fits into the aforementioned Fidelity all-in-one ETFs. Take a look.
Trump wins the election. It goes from, you're going to keep me honest, I want to say it goes from 60 to 100 in record speed. Then it sort of hangs out at 100, drops down to 80 with some market volatility.
Yeah.
Seems to have, but now they come out and say, no, we're going to hold some reserves. It seems to be back now, and I'm going to call it the mid-90s, but it seems to have found, I'm going to say, a little bit of a groove here.
Yeah.
What are your thoughts on Bitcoin under this administration going forward? Because I think a lot of people are in an interesting spot to say, is this 100 I love reading is this 100 going to 200 or 100 going to 50?
Yeah.
Your thoughts on that?
Yeah, it's fascinating. I think the most important thing that came out of the Trump announcement on the weekend was calling it a strategic reserve and not a stockpile. And so some might look at those interchangeably, but a strategic reserve is very different because nothing would stop a government from holding a stockpile of crypto assets. A strategic reserve is an administration decision very similar to holding gold in Fort Knox. So the fact that he decided to call it strategic reserve rather than a stockpile, I think was a bullish indication on the administration's sentiment towards the space. To say whether it's going to 200, I think is difficult. It's going to be the question of how many other central banks and governments around the world look at the US's decision to announce a strategic reserve. And if they follow, it's really important to remember that there's a fixed supply of Bitcoin. And so the more buyers that you attract to the market, that inherently pushes the price of Bitcoin up. And with 21 million Bitcoins in existence forever, that could create some strong upwards pressure. So it'll be interesting to watch other government administrations' response to the US strategic reserves. Because if you go back through time and say, what drove gold was, okay, gold was backing the currency of the US, they took that off. But then we saw huge strategic reserves, and it happened globally. So one government did it, and then another government follows because they don't want to put it in a disadvantaged position. So now we need to watch what other governments and central banks around the world do.
Let me ask you a question then. So that's, I'll say, the bullish case. So the bullish case is everybody piles on, they all want to hold it, there's an infinite or a definite supply, and it drives it up. What's perhaps the case on going back to 50 then? Is it market sentiment? Because it does seem to move a lot with the volatility in the market.
And I think it's also around inflation expectations. So not inflation itself, inflation expectations. So it had its big run up on inflation expectations. And I think a lot of people say, well, Bitcoin didn't provide the inflation hedge that it was supposed to, or people talked about when inflation actually went up. But it's important to remember that the first leg up from, let's call it 40 to 60 was when inflation expectations ramped up. Then it kind of stalled, and then it said, okay, inflation's here, but the move happened prior to that on the expectation. So what's the bearish case for it is if inflation expectations decrease dramatically, I think it does have some weakness on that side. The other thing is it has become correlated to risk assets and risk off events. So if you saw something like the Mag 7 fall dramatically, I think that would not be bullish for the price of Bitcoin. All that being said, we do own it in our all-in-one portfolios.
I was going to ask you about that.
We rebalanced the portfolio, so we took our overweight to Bitcoin off at 102,000 USD. So the peak was 109.
It seemed like a clever move.
Yeah, fortuitous timing around that rebalance. So we went back to our strategic weight, which is 3% in growth, 2% in balanced, 1% in conservative at about 102,000. So we took some of those gains that we saw in 2024 off the table. The other big rebal that we did was our momentum factors did incredibly well in 2024. Those also all came back to strategic weights, which I think kind of speaks to the beauty of design of these products is that our winners will run throughout the year. We bring it back every January, and it was fortuitous timing that we got pretty close to the peak of Bitcoin to take that overweight off.
So earlier, Mark Schmel mentioned his approach to company meetings. Fidelity has incredible access to companies' management teams. For more on that and how both the equity and fixed income teams meet companies together, here is fixed income portfolio manager Celso Munoz. Celso is based out of Fidelity's Merrimack, New Hampshire fixed income headquarters and explained here to host Glenn Davidson how he first joined Fidelity as an equity analyst in 2005, covering life insurance companies, and how he transitioned to the fixed income side.
I dug into those portfolios. I set out to learn them inside and out. And my thinking was that if I could figure out which companies would have lower losses than what the market expected, those could be great stocks. And so I relied really heavily on our fixed income team. I got to know our fixed income portfolio managers or traders or analysts as I dug into those portfolios to help me make really good calls. And as is usually the case with the collaboration that happens across equity and fixed income, I think that's one of the big differentiators for us. I think it gives us a big advantage. My insight from the equity perspective also helped my fixed income colleagues make good decisions within the bond portfolios. But as I went through that process, I ended up loving everything about fixed income, the asset class, the analysis that goes into it, the different types of bonds that are in the market. And so in 2012, when there was an opening on the fixed income team, I raised my hand for it, and I was fortunate enough to get it. So at that point, I became an analyst in fixed income, covering all of insurance on a global basis. So life insurance, property and casualty insurance, including both U.S. names, Canadian names, but I also had coverage of the GSEs. So that would include Fannie Mae, Freddie Mac, the home loan banks, which gave me an interesting perspective on that side of the market. And then in 2016, so 9 years ago now, I became a portfolio manager on what we call the core and core plus team.
When you're in company meetings, when you're involved in discussion around balance sheet, when you're involved in discussion around credit issuance, part of your brain is looking at it as an equity analyst as well. I'm sure you're actually looking at it more thoroughly than if someone was just on this side or this side. A real asset for you and for the team, I'm sure.
I think it does help me in the investment approach, but maybe even taking a step back from that, Glenn, I think one of the big advantages that we have as a fixed income manager is that equity presence. Not many can claim to have that. And can I just give you a couple of quick examples?
Absolutely.
Yeah. Okay. Great. So every single year, we get thousands of meetings with CEOs, CFOs, heads of business units that come in to see us. And at those meetings, we have our equity analyst, but importantly, our fixed income analyst is sitting in the room. Our equity portfolio managers are in the room, but also our fixed income portfolio managers are in the room. And what that means is that we end up having a really balanced discussion. Think about being a CFO in that seat, sitting across the table from both the equity analyst and the fixed income analyst. And that's a situation where, odds are that we may be their largest shareholder. And if we're not their largest creditor, they probably want us to be their largest creditor. But for a CFO, that can be a really uncomfortable spot to be in, because odds are they're going to say something that's going to upset either the equity analyst or the fixed income analyst. It's really hard to make both of them happy. And then once they leave the room, the analysis that they do together ends up adding a tremendous amount of value to both us fixed income portfolio managers and equity portfolio managers at Fidelity.
So changing directions a bit, tariffs and a growing trade war continues to be top of mind. And next up, we'll hear a few experts on the topic. First, Jurrien Timmer, Director of Global Macro, explains what is a tariff and how will they continue impacting the markets.
Basically, a tariff is like a tax on an import. And on the surface, a tariff would be either inflationary to the consumer of those goods, right? Because the importer of the goods or services would add that cost, that tariff, to their price, and then the end consumer would have to pay for it. And that's definitely a concern that many people have, is that tariffs going into the U.S. will be inflationary. But if the producer cannot pass those costs onto the consumer, then presumably it would come out of the bottom line of the company. And so that would hurt earnings. So either way, tariffs are a lose-lose situation. It either increases prices and becomes inflationary, or it decreases profits. Of course, life is never that simple. There are nuances, right? So if you're a U.S. importer and you're importing a good out of Canada, for instance, and that import, let's say, goes up 10%, but the value of the dollar goes up 10% against the Canadian dollar, the two offset each other. And so it's a question mark as to exactly where the pros and cons end up. But trade wars and tariffs are a lose-lose situation. It's just a question of who loses more. And of course, the U.S. tends to have less of its economy tied to exports and imports. So the exporting countries like China and Canada and Mexico presumably would get hurt more in a trade war. So tariffs would affect the markets, of course, because they could be stagflationary, right? They either increase inflation, which means that bond yields would rise, the Fed would not be able to cut rates, or they would reduce the profit margin of the companies that make up the stock market, and then you have slower earnings growth. Either way, it's a bad outcome. It's just a question of degree, right? So again, if the currency is appreciating, that could be an offset. If other alternative supply chains are readily available, right? So if a U.S. importer can have something produced in the U.S. relatively quickly, then maybe we don't feel it as much. But either way, there is going to be some cost to be paid for this, and so it's not a positive for the market. And you can see this in the price action that usually on a Sunday when we hear something about a tariff, you see the futures go down, and if those tariffs are lifted or not imposed, then the market goes back up. So clearly, this is one of the events that is front and center on investors' minds right now.
For more on Canada-US relations, next up we'll hear from David McNaughton, former Canadian ambassador to the US during the Obama and Trump administrations, who joined Fidelity Connects earlier this month. We'll hear how these tariffs will impact Canadian industries and sectors, and how he believes Canadian officials could approach negotiations and trade talks moving forward.
You are currently in Europe, not far away from some of the action actually where Canada has been kind of lobbying to get some new trading partners in a way, or bolster old ones. Could you tell us a little bit about what diplomacy, which you are steeped in, means right now?
Well, I think that the world has obviously changed a lot in the last decade or so, and that most of the multilateral organizations and the alliances that have been formed since the Second World War are in tatters, and we've got big powers trying to consolidate their influence over either their geography or whatever, and now we were kind of relying on the United States as our NORAD partner and our NATO partner, and now it becomes clear that we have difficulty relying on them because the President of the United States signed a trade deal with us in 2018 and said that it was the best trade deal that had ever been done. And now, 7 years later, he imposes 25% tariffs across the board with no real rationale for it. I mean, he talks about reciprocal tariffs, and yet we have reciprocity. We don't put tariffs on American goods under the USMCA, CUSMA, whatever one wants to call it. Then he talked about fentanyl, and that's not a serious. It's a serious issue, but less than 1% of the fentanyl that goes into the United States comes from Canada, and that's their figures, not ours. And so, all of the things that we used to rely on, including, getting members of Congress to speak up because it was in their interest to do so, members of the U.S. business community to speak up, they all seem to have gone silent, and Trump is sort of running the show with Peter Navarro yapping in his ear all the time, and so we're in a totally different world. And
can I ask you if you think that will shift at some point, Ambassador McNaughton? Do you think at some point, right now, perhaps Congress members who would normally be able to have some power up at the top, will that shift, do you think?
Yeah, I think so. I mean, what's happened right now, like in his first administration, Trump brought in a lot of really good, solid people who gave him good advice, and he actually listened to some of it. And he had a Congress that was split, and he had to get them on side. And even, a lot of the Republicans were prepared to stand up to him to defend their own states' interests, constituents' interest. Right now, what you see is he's surrounded himself by and large with a lot of people who tell him what he wants to hear, and he's got senators and members of Congress who are afraid of being primaried. As we get closer to the midterms, I think you're going to see that shift.
That's really interesting. Feel free to take some water if you want there. It's interesting,
Yeah.
and the Prime Minister's Council, which you are on, there's the list of, if you know politics and power, they're basically household names, including yourself. I'm curious what this council has been doing, because exactly that, it is meant to inform the Prime Minister and for advice to be created there. I'm curious what you thought of the Prime Minister's press conference yesterday. It was strong words, actually. He was advised to say some of those words?
Yeah, I think it was both advised to, and I think he, senses the mood of Canadians. I mean, when you have, Canadians at hockey games and basketball games and other sporting events booing the U.S. national anthem, you understand that the world's a little bit different.
Right.
And, I think Premier Ford in Ontario has, been able to capture that mood and that sentiment. So I think the Prime Minister, had to get up there and be defiant and say we're going to retaliate. And it's been really frustrating for everybody, premiers and the business community and the federal government, because Trump has not come up with a real rationale for doing what he's doing. It shifts every day. Today he put out something on Truth Social about, well, it's because they don't treat our banks fairly. I mean, so I think Canadians are angry. They're frustrated, and I think that the politicians are reflecting the mood of the country at the present moment.
For more on tariffs' impact on Canada, next we'll hear from Claire Fleming, Equity Research Analyst. Claire is on the Canadian Equity Research Analyst team who support the portfolio managers and specialize in their own sectors of the TSX. This specialization allows the analyst to get deep into a specific sector and over time rotate through a variety of sectors so they can grow and think like a diversified portfolio manager themselves. Here's Claire for an update on the materials sector, including potash and the introduced tariffs, and a look at some commodities, such as the demand for copper.
Tell us a little bit about the potash industry and probably the agricultural backdrop that has led to this decision and really the global story for it.
Sounds great. And maybe just for context too, materials sector is broad. So within my coverage group, a lot of that focuses on agriculture and potash, as you mentioned, as well as the copper and diversified miners, forest products, packaging companies, and some other chemicals companies as well. I think when talking about potash and the impact of tariffs on my broader coverage group, maybe the direct impact of tariffs on earnings is not as material as some might expect, but it's more on the indirect impacts where I'm spending more time and focusing a lot of research going forward. So maybe just to clarify that on some of the direct impacts of, and why I think maybe some of those direct impacts of tariffs on earnings might not be as bad as expected. And that's because of the geographic diversification of some assets, some of the foreign exchange benefits, as well as the price response we're seeing in some commodities. So on that geographic diversification, even though I research companies that are listed in Canada, if you think of the copper miners or lumber producers, a lot of these companies have assets that are outside of Canada and not as exposed to cross-border Canada-US sales. On foreign exchange, for some of those companies that have assets in Canada and Canadian labor costs but sell in US dollars, that weakening of the Canadian dollar is helping to reduce some of their production costs relative to global peers. And on the price response we're seeing in commodities like potash that you referenced earlier on, we're starting to see a gap in US pricing benchmarks compared to some other areas of the world for commodities like copper. We've seen steel prices increasing. Canadian lumber price benchmarks are up 30% for some grades year to date. So we are seeing that price response. I think it's more on the indirect impacts that we are talking about, where we're spending more time for potash and other commodities as well. And that's really thinking about how some of this uncertainty that we're seeing, that we all feel when we see these back and forth headlines related to tariffs and trade, and how that can impact
global questions of everything.
Demand decisions. So like if you think of the example, if you're someone who's in charge of running an appliance manufacturing company and you might sell to North American customers, even if you're wanting to expand your operations, you might be putting off that investment decision and sinking that capital because you're just not certain yet as to what that end tariff policy might be. Or if you're that end consumer who's wanting to do a kitchen upgrade, have those appliances that need the copper wiring and components within them, you might feel a bit uncertain about your own job prospects or uncertain about what your life could look like 6 months from now, so you might be putting off some of those decisions. And that ties into the demand outlook for things like copper, as all those little decisions add up. Things like potash demand, I think that's maybe why you're seeing some of that reduction in tariffs relative to the initially proposed 25%, just to help improve that affordability for US farmers that are facing some challenges from the volatility we've seen in corn and other crop prices the past couple of years.
Moving from tariffs to the next big topic on Canadians' minds, our changing political landscape. It's now official. We'll be heading to the polls on April 28th for our next federal election. Now, to provide us with their thoughts on party leaders and what the next month could look like on the campaign trail is Corey Tenaik, former Director of Communications to Prime Minister Stephen Harper and current CEO of Rubicon Strategy, and David Hurley, former top advisor to Prime Minister Paul Martin and partner at Rubicon Strategy.
Corey, I might start with the discussion of the Ontario election, which you ran essentially for Doug Ford. Congrats. That worked very well. Any sort of quick lessons of an election under tariff threats from Trump? Like, what was successful and useful?
Well, that topic basically swept the table clean of every other issue. It became, the centerpiece. Certainly affordability was on the table a bit, but kind of in relationship to the Trump tariffs and the amount of economic disruption that potentially would hold for the Ontario economy and Canadian economy. So I think it's become the elephant in the room, right? Like, this is the one defining issue that's animating the electorate and causing people to switch who their voting intention is for. That said, it presents some big challenges for opposition parties because this fight is happening in real time during a campaign.
Right.
So should the federal election be called this Sunday, which is my guess anyway as to when it'll be, you're going into another round of bare knuckle trade war battles with the President of the United States and Lutnick and others. And so, what does that look like? Well, it's a fight between the Prime Minister and the President, and the opposition leader is not really a huge party to what's going on and what's driving news. So if you're in Washington, as Ford was a couple times during the campaign, very difficult for the opposition leaders to get any share of voice. In many respects, we were running a campaign against Trump, not against Bonnie Crombie or Marit Stiles, and I think it's quite possible to see a similar dynamic happening at the federal level.
David, let's put that to you and to some of your thoughts on what we've seen over the last few days and really where we go from here. Just open it up for us.
Well, I think, what Corey just described is obviously why Liberals overwhelmingly chose Mark Carney as leader, because Carney was seen as the person who was most qualified to manage Canada through this extraordinary situation. He has an extraordinary CV and resume and history, and it is ideally suited, if you will, in a number of respects for this circumstance. And so that is going to be what the campaign is about. The Conservatives appear to be struggling with that reality a little bit. They continue to want the election to be about the things it was going to be about before Mr. Trump arrived, which is getting rid of a long-term government and getting rid of things like the carbon tax that were irritating people. But it's pretty clear that those are not going to be the driving forces of the election for most Canadians. And the real issue now, in terms of this election, in my view, because I think Carney is now the front runner, because I think he owns this issue. And I think the Conservatives and Poilievre have to find a way to make Canadians believe that Canada would be in as safe a hands with Mr. Poilievre. And it's not just Canada's economy or Canada's response to the tariff threats. It is Canada. And Canadian people believe that Canada is existentially threatened and challenged right now. It has created a wave of nationalism like I have never seen before, and in part never seen before because it fully includes the province of Quebec, which normally keeps its enthusiasm for Canada wrapped up a little bit. But in this case, they are a full participant. So that's what this election is going to be about. Okay. You know, Mr. Poilievre, I think right now, has positioned himself as somebody that sees more things wrong with Canada than right with it. And people agreed with him 6 months ago, and they don't agree now. Timing is everything. The change in sentiment about federal politics is as dramatic a change as either Corey or I will ever have seen in Canadian politics, because this election was so over and so done with. And the emergence of Trump has completely changed the criteria on which people are selecting that prime minister. And so it's now a highly competitive race, and we're going to have a race between two very distinct offerings, right? Mark Carney is the best exemplar of the establishment and the system that Canada can offer. And so to the extent that one believes in all these things, multilateral organizations, international arrangements and agreements, collaboration, nobody better than him to do that. But on the other hand, Canadians are in a very populist mood, not a lot different from that in the United States, rejecting the consensus around establishments and institutions. And so you're really going to have a pretty compelling choice between somebody who draws his strength from what he hears at the rally in the working town of northern British Columbia in Pierre Poilievre, and somebody that knows what his conversation was like with Prime Minister Macron.
I hope you enjoyed those segments. Now, for more, you can find each clip as a full Fidelity Connects video podcast available on YouTube, Spotify, Apple Podcasts, and more. We had a lot of great content this month that we couldn't get to today. Investment Director Tom Stevenson for the latest out of Europe and the UK, for example. So take a look at the podcast. I'm sure there is something for everyone. And as always, for more from us, please keep an eye on Fidelity Canada's LinkedIn, YouTube, or Instagram. So thanks for watching today, and I hope you'll join us again on The Upside. I'm Kyle Sharapta.